The Australian dollar remains stronger as the US dollar continues to weaken ahead of the all-important non-farm payrolls report. The market is expecting another strong jobs report which should send the US dollar higher. But if the report comes in weaker than expected, the dollar could fall further still. Right now, the US dollar index is at 99.61. This is down more than 1% on the week so far and is not far off its lowest level in nearly 2 years. At the same time, AUD USD is not far off its highest level in more than 2 years. It's currently at 0.7538. So what's driving the Australian dollar higher and the US dollar lower? Well, there are two main reasons. The first is that the RBA is expected to hike rates in June, while the Fed has already started hiking rates and may even have to start hiking rates aggressively if inflation in the US doesn't start to come down. And sure enough, inflation in the US has come in higher than expected for the last 2 months. So the market is starting to price in a more aggressive Fed. In other words, the market is pricing in a higher chance of a 50 basis point rate hike from the Fed in June. The second reason is that the US dollar is always a bit shaky ahead of non-farm payrolls. Last month, for example, the US economy added 428,000 jobs, which in any case, the Australian dollar is looking good right now. Besides the reasons I mentioned earlier, the AUD also benefits from being a commodity currency. Since oil and gas prices remain high, the Australian dollar is benefiting. AUD USD is currently at 0.7538. The support level is at 0.7510, which was the previous swing low. If this level breaks, the next support is at 0.7465, which was the 2021 low. The resistance level is at 0.7575, which is a psychological level and also the top of the current range. If this level breaks, the next resistance is at 0.7605, which is the 2018 high. So will the Australian dollar continue to strengthen, or will the US dollar recover ahead of non-farm payrolls? Well, the US dollar usually strengthens ahead of non-farm payrolls because the market is expecting good news, and the strong jobs report would reinforce the idea that the Fed will have to hike rates aggressively, which would strengthen the US dollar. But this time around, the market is already pricing in a very strong jobs report. So if the report comes in as expected, the dollar may not strengthen much. However, if the report beats expectations, the dollar could strengthen a bit. Either way, I think that the Australian dollar will remain strong because the RBA is expected to hike rates next month, and the US dollar will remain weak as long as inflation in the US stays high. That's all for today. If you liked this video, please hit the like button. Thanks for watching. See you in the next video.